still think that's unnecessary.
Blow out my burp.
You blow out all the air in your lungs.
Yeah, blow out all the burps so that way when I come back, you don't get remnants of the fucking
I
smell
don't
of the
give a fuck
burp.
about no remnants.
It's just nasty.
It's toxic air. You have to get it out of your system.
It's all good.
It's just really nasty. People just burping people's faces like that. So anyway,
What's up, guys? Welcome to the next episode of K to the I to the O to the Mac to the Rho with my bro Billy Joe and Isaac. You know, how y'all doing?
I'm good. And I kind of like the name Billy Joe. Makes me feel like I'm living on a farm with a straw hat, wear overalls.
Whoa.
Uh-oh.
Isaac, how you doing, man? How's DC treating you?
Just vibing. DC is always enjoyable. It's getting more humid here, though, because I live in a swamp in two ways.
Really?
Yeah, DC is a swamp. You know that?
What's the other way?
Well, there's a joke that DC is like the swamp because it's like full of politicians and yeah.
I didn't know what he meant.
Yeah, I thought it was
Oh, sorry. I guess this is like, I don't know, maybe it's more niche than I was expecting.
The first thing I thought about, no homo, was the swamp ass. I'm like, wait, what?
Yeah, well, you get that when it's too humid out, so.
Wow. Well, fuck it. Well, cool, man. Per usual, guys, we're going to give you our macro view of financial markets. We're going to go through some stocks, go through some crypto, and just kind of let you know how we think things are going. We're going to go through some Bitcoin ETF data. Let's get into it. Starting with the central bank balance sheet, they're still offloading bonds. I want to see what happens when we touch our 62 EMA, if we'll go lower or if we'll have a bounce. Only time will tell. The M2 money supply has been consolidating. So I don't know where they're printing money at, but this needs to come down as well. Like, this is still rising. So yeah, that's not good. Fed's kind of running out of tools. We got gold near all-time high levels. We got the S&P just hit another all-time high. Or let me go down to the weekly chart. On the last episode, we talked about, this could just be bouncing to go higher. It looks like that's what's happening right now. You see that long wick that's saying the bulls are still in charge. And then if we look at the Dow, everything's just kind of bouncing back. Market's been green lately. If we look at Apple, so, Apple was already in the midst of doing the largest stock buyback program in history. Now, here they are again in the midst of doing the largest stock buyback program in history. And Warren Buffett, he actually sold a good amount of his Apple stock. He dumped 13% of his Apple stake before the $110 billion buyback. Now, you probably think to yourself, like, man, if they're buying back their stock, that means it's probably going to keep going up. So why wouldn't Warren Buffett buy more, or at least hold on to what he's holding on to? And my assumption is that companies normally do large buybacks when they're at the, I'm not going to say end of their business, but at the end of their cycle. Because it's just like, man, Apple it's the largest company in the world right now, I think. It's a multi-trillion-dollar market cap. So it's going to be hard for them with any kind of business, even with how much money they have, to come up with some kind of way to grow their stock organically. Like, they're coming out with the iPhones, not much is new, AirPods. They launched their whole AI and VR headset, but the drop was kind of a flop. So it's kind of like their only option to, buy back their stock. And to be honest, as an investor, I'm glad they're doing it, because if Apple goes down, it makes up most of the weight of the S&P, and everything else would drop with it. If we go to Bitcoin, I want to talk about a little something special here, or not special. These red lines represent all of the previous halvings. And if you look after the halving, we see Bitcoin go on its, parabolic rally and reach all-time highs. As you guys know, this is the first time that Bitcoin reached a new all-time high before the halving. More importantly, I want to show you guys the Bitcoin dominance chart before we dive into the Bitcoin ETF data. So if you look at the Bitcoin dominance chart, these red lines also represent the halving. You can see that around 200 days after the halving, Bitcoin dominance drops because altcoins usually moon. People make money with Bitcoin and then they cycle those profits into altcoins. So this gives you a good idea as to where we are in the cycle, or at least where I think we are. So you saw it here drop. We saw it here tick up, then drop. And now here we are. Bitcoin dominance is still really, really high. So I wouldn't say that we're in a full on altcoin cycle yet. I want to see Bitcoin get below the 62 EMA, just like it did here, break and retest the upside, break and retest. So I think to answer everyone's question in their minds, we still have a ways to go before the altcoin cycle. Here, I got to airdrop myself a picture real quick. I forgot to do that. Second.
Thanks for tuning in to another macro. See you guys in the next one.
Have fun, fuckers.
All right, guys. So now let's talk about the Bitcoin ETF data. So
It's good data.
this is the way that institutions have a way to get in Bitcoin. I mean, they can still buy it, but they don't want to take on the security risk. So this chart shows the global ETF. So, on the last episode, it was before the Hong Kong ETF got released. We can see that it wasn't as exciting as we'd like. And if we just look at the overall numbers, it is up, but it's not raising as crazy as it was in the previous months. Kind of like consolidating a little bit. And you can see that these numbers are really, really small. So I think that if this doesn't pick up, well, an ETH ETF could change this, but assuming an ETH ETF is, months away or however long away, our hopes and dreams of seeing a six-figure Bitcoin, I don't think it can happen without the ETF picking up.
I'm still hearing some analysts say, Tom Lee is one of them, say we can still hit 150,000 in 2024. So you don't think that's doable anymore this year?
I think it's doable, but I think this has to lead the charge, the Bitcoin ETF.
So if this volume doesn't pick up, then you don't see it happening?
I don't see it happening. Unless an ETH ETF gets approved, I don't see it happening. And I want it to happen, but I don't see it.
You don't think an ETH ETF approval would just create more outflows in Bitcoin ETFs that correlates to the inflows in the ETH ETFs?
It could, but I think more so it would make crypto more stamped. Could be wrong though. And that's why you invest what you're willing to lose, guys. Moving on, you got the ETH to BTC ratio at pretty low levels. We haven't been this low since literally before the last bull market, May 2021. So this isn't financial advice, none of this is, except for what Isaac says. No, just kidding. This is a good time to sell your Bitcoin for ETH, because historically speaking, in bull markets, ETH is going to outperform Bitcoin. We're still in our altcoin plays. You see the market's kind of been correcting lately, just consolidating. So I'm just yield farming and accumulating high quality assets. What's your guys' thoughts on the markets?
Isaac, you take us away.
Not everyone at once.
Yeah, market sucks ass right now. I'm not vibing with it at all.
I think
I'm not. It sucks. I'm still in Solana, and I'm just waiting for it to go up. What are my general vibes in the market? Well, something I was looking at a bit ago was the fact that wages were, I believe they're now on par with what they were pre-COVID. So during COVID, wages shot up. Reason why is because so many people were unemployed that the people that were working had generally higher wages, but it said nothing about the overall wage market during COVID. What you really had to look at was like wages, average wages like 8 months after COVID lockdowns. You see like a massive decline from pre-COVID wages. And they basically remained down up until I think 3 months ago when average wages began to go up. And this is why everybody called the period between COVID and 3-4 months ago, they called it the vibeflation. That's why I said I wasn't vibing. No, it's called a vibe session or something, like the vibe recession, because people felt like we were in a recession, but we weren't technically in a recession. And it was because wage growth was crap and your purchasing power was crap also. So you're earning less and your purchasing power was less, even though technically all stocks are at all-time highs and everything else. And this is also why Biden had such low approval ratings, despite the fact that the economy on paper was doing great. People still didn't like the way he was dealing with the economy because people just felt like their dollars were worth less and they were getting paid less, which they weren't. That has subsided for the most part, but now it's funny. Now, as wage growth is surpassing where it was pre-COVID, and inflation is not done, but it's kind of under control. I know it's gone up slightly, and we might have sticky inflation, but it's vaguely under control. we now see the like equities taking like a nosedive. Not a nosedive, but there's definitely hesitancy in the market. And that's my general thoughts on everything.
Yeah, so I would add with wages, that's part of the reason the Federal Reserve is in a position to where they have markets kind of throwing out there that they could potentially just not cut rates or raise rates, just hold them for the rest of the year. Because wages have gone up, but not to the point where they would be inflationary, causing a wage price spiral. And so it's showing that the labor market has cooled, but not cooled too much. And it's not as hot as it was a few months ago in terms of adding jobs, which means we shouldn't see more extreme upside on wages, which means the labor market is that under control. I don't think the inflation side is under control. I think it's super sticky, and I think we risk still moving higher. But with this latest labor market data, it seems like it's going to remain like in this consolidated state, inflation for whatever print you're looking at for the most part for the near future. And the Federal Reserve, since the one thing they were looking for is evidence that inflation is moving down sustainably to 2%, it's not happening. And so that was one of the barometers for a rate cut. And so I've been one screaming for a rate cut, not screaming, but anticipating a rate cut.
This guy woke me up last night saying rate cut. I'm like, bro, I'm trying to sleep. Fuck off.
It's kind of epic, honestly.
I was one of the guys anticipating a rate cut in July. Now, based on the data, I do think even July would be too early, just because we're seeing labor market cooling down, and now we're seeing sticky inflation, way more sticky than any of us have. Well, I ain't gonna say that, but it's damn sticky, okay? And so the Federal Reserve has no evidence that inflation is sustainably moving down to that 2% target, and so it makes sense to wait. The next one will be September. That's the next option for a rate cut.
Right before elections, though.
But we could still be in a position upon seeing further data that still doesn't make sense to cut. Even the Federal Reserve, they don't know when they're going to actually cut rates, just for the record, because they're in a delicate balance right now of data that they just don't have yet.
So it's just test and retest. Like, I agree with that. I do think there's going to be a lot of pressure to cut rates up into the election, because definitely like Biden's in a really tough spot right now. But it's only going to get tougher if we see like a recession or something, or if like inflation doesn't go away. Though, obviously, the Fed is a nonpartisan entity. It'll do as it pleases. But it is also a pretty open secret that, executives can definitely apply pressure to the Federal Reserve in order to get certain things that they want.
Well, and if we get any recession, unless it's like a black swan, I don't think we're going to get like a real world recession. We're going to get more of like an asset recession, like a stock market recession, if we do get that. Because, I mean, even if you look at the bond market, for example, I've been saying yields are going to move higher. Now I think they're going to move just a little higher. We might see 5% 10-year yield. And the reason I'm saying that is because if you look at Japan, which is our largest bondholder in the world, they own the most US bonds. They have to pull back on buying bonds because now it's more expensive because of the Japanese yen. I don't want to call it a collapse, but the depreciation that they have experienced just in this last few months, for example, which makes buying bonds more expensive. And so now you got those foreign bidders, there's going to be less demand when it comes to these bond auctions from foreign bidders. Now, that could result in higher yields. Maybe not, but it's most likely going to result in higher yields, which strengthens that competition between the yield that you're getting in the stock market and the yield that you're getting in the bond market. And if someone's generating 5.5% on the bond market, and your average return year over year is 8% in the stock market, well, a lot of guys are going to say, you know what? It makes sense to take almost the same return for relatively no risk. And so that could cause more downward pressure on the stock market as well, just because we're seeing the whole Japan situation, for example. And I don't think, like I said, that leads to a recession in terms of the real economy. But if anything, asset prices will just continue to fall. And when I say asset prices, I mean stock prices. I don't think real estate is going to collapse, even though some people are screaming for this shit because they see one market in Florida experiencing supply shocks to the upside. And so therefore prices are coming down. It's like that means nothing for the rest of the economy, for the record. We knew Florida was going to have to come back down after we saw the huge exodus. So yeah, I don't really see a recession still on the horizon. And it's not like I see us shooting to the upside either. It's more so like, I don't want to call it a dark period, but it's like,
You think we're gonna go into an election with rates just held high still?
it's a possibility, but it depends on the data. 100%. 100%. And so my assumption now, based on where we are currently, is that we're still not going to get a cut in September unless we see something different. If we still get sticky inflation, if the labor market kind of doesn't continue to cool at that rate, I mean, yeah, it doesn't make sense. And they can just hold rates maybe till November or even December, because who knows? After the election, maybe something happens. I don't know. But right now, there's no reason for them to actually cut rates. There isn't. There's no reason for them to raise rates either. It's kind of like just hold them steady. That's right now, though. And remember, I was one weeks ago saying they were going to cut in July for a few reasons, but we shall see. And look, there's still a possibility that something happens between now and July where that cut is still going to happen. But right now, there is no data that warrants a cut or warrants a hike. And you can find pieces of information that points to both directions at this point.
How do you guys feel about Trump's recent announcement that he will manage interest rates himself?
That will fuck monetary policy in the that will mess everything up. Cut that part off. That'll be horrible. There is no world in which we should have the president controlling monetary policy. Oh my God, especially somebody like Donald Trump. He was saying that, and I have, my opinion might differ from most on Donald Trump, but he was one of the guys saying we should have negative interest rates back in the day.
Yes, he did say that. He said that recently.
Oh, did he say it recently?
Hmm?
That's horrible. No, don't agree. I think
he wants to return to a system called yield curve control, which is what we had in the 1940s, and we ended it in like 1952 or 54, where basically
we didn't end yield curve control at all.
No, the system specifically that we employed in the 1940s, we ended. Oh, sorry, it's like 1940s style yield curve control, where the interest rates were a partisan issue. It wasn't set by the Fed itself, but it would there'd be, I don't know the exact mechanics, but it was far more close to what Trump had in mind, where like the president is directly taking part in setting the interest rates.
So yield curve control, for the listeners real quick, is basically when it's fiscal and monetary policy working together, right? And so you got the Treasury and the Federal Reserve working together to keep short-term interest rates in the bond market, so short-term bond yields, below a certain level, so that way it doesn't spike effectively through the roof and you create a huge inversion. And in some cases, they uninvert it with yield curve control. And so the process by which that's carried out in the US is buying treasuries. So the Federal Reserve buys treasuries. And by buying up those treasuries from institutions, and by buying those treasuries, they effectively keep yields lower on the short end of the curve, so that way they're not shooting up. And when I say treasuries, they're predominantly buying T-bills, which is why we're seeing that huge runoff off the balance sheet of bonds right now. Those are all the T-bills that they bought during massive yield curve control back in the day. And so this is even a form of yield curve control. They know by dumping these treasuries or letting them roll off that the short end of the curve is going to remain higher. And so that's where we are right now. So it's not really ending. It's more like we're trying to reverse the yield curve control that we've already employed. And at this point, it'll never end. It's kind of part of the game. And I think Donald Trump will fuck shit up.
This is basically what Donald Trump's trying to do. Do my Donald Trump person. Excuse me, guys. I have a plan. It's gonna be huge. We're gonna make everything cheap. It's gonna make the economy come roaring back. Let me tell you, fake news. We're gonna make the yields really low. We're gonna make cars cheap. We're gonna make gas cheap. I'm gonna save oil again. I'm gonna control the interest rates on my own. We don't need Biden. He's messing everything up. It's true. That's what he wants to do.
More sounding like Cartman from South Park.
I feel like I sound like Jamie Foxx.
Come on, guys. We're gonna control the interest rates.
You guys making any changes to your portfolio?
I'm conducting seances to get the price of Solana back up. So that's about sacrifices, praying to ancient deities.
Oh, okay.
I'm in Solana. I want Solana to go up.
I'm like, seance. What the fuck is that?
That was a joke. You guys take me too seriously sometimes. I'm just joking most of the time.
I knew you was joking. I knew it say
Yeah, thank you.
He elbowed me. He's like, hey man, what's seance? It's like, no. You making any changes?
No changes.
No changes. Well, hey guys, we thank y'all for tuning in. We're going to put a button on this thing here. If you got value from this content, like, comment, subscribe, share with a friend, book a free strategy session if you want to learn how to take advantage of the space, whether it's yield farming, trading, investing, whatever, we got you covered. But with that, thank you for tuning in, and we'll see y'all in the next one. Peace out.
Girl Scouts.